Welcome and thank you for clicking on my video. It is a great time to do some technical analysis for the SPY Qs, Apple, Tesla, Amazon, Nvidia, AMD, and Meta as we go into April, because there really looks like only two things could happen. Either we are going to see some kind of corrective move in order to head higher, or we might just be heading into some kind of stock market crash. So that's what we're going to get into today. Before we get started, one extra thing on here right before we get started, make sure that you are looking down in the description. You only have about 24 hours to get that course for $100 down in the description. Join us on Patreon to get those weekly ranges, but let's get into it. We actually did update those monthly ranges for the SPY here, and we're noticing to the upside 539.61 to the upside and 506.53. So if you're new here, this is what the options market has priced in for the whole month of April, and it is not the biggest price action, but maybe we actually do see the SPY come and test that 50 finally and see some kind of reaction up. We are still open to positivity as we haven't seen that bad news to really dictate whether or not we are going into a bear market or some kind of crash. So really pay attention to this. Be open to both scenarios going into April. This is a strong move. It will have to consolidate at some point and reach back down to grab some buyers, but is that just going to be ripped away once those algorithms get started? We'll have to talk about that going forward. You're just seeing all the divergences on the daily up here, which are telling you, hey, there could be some big pullback. This is what leads to reversals and trends. These divergences, this weakening in momentum leads to reversal and trend. But in order for that to happen, you have to get down below the center line. You can see we're well up in there. So if we do pull down to lower levels and curl up one more time, well, we can see this extend for quite some time. So that's not necessarily what I'm leaning towards. I think April will be a messy month for the stock market as these divergences start to prove something, mainly just because of the weekly, okay? So the weekly way overextended here. And you can't really see it on the SPY. When we get to the Qs, the weekly is really going to say, hey, yeah, we might be seeing some lower price action because we have a divergence, which gives us potential to go negative. Right now, the SPY sitting at higher levels. The Q's not confirming this move, so that's something to pay attention to. So let's go back into the daily. So if we go through this real quick, I just wanted to point out what this white line was. This white line is when CPI comes out. That would be Wednesday, the 10th of April. That is when CPI comes out. So if we do see maybe some kind of selling, down into this area, and then we see that pop back up, well, we could get a divergence before that news. But if we actually move down before that news, if it's good for the market, we have the potential to grab buyers down here. If it's bad for the market, we have the chance for this to escalate below the monthly expected move. So this is what the options market has priced in for the whole month of April. And as you get outside of that, you have a 68% chance to land back in the zone. But if you do go well outside of it, you can use it as a retest, right? We can use it as resistance at that point to actually head lower. So it's pretty much 68% chance we land in this zone if we head down, or if we head to the upside, 68% chance down into this area. But you actually have a 32% chance for something bad to happen, something more dramatic to happen to the downside. So that's what I would pay attention to going into April. It just does not look like the best time to buy stocks at this point. It really looks like a good time to sit on your hands, be a little bit patient, wait for some kind of pullback, and then see a reaction in the future. Doesn't mean we can't still go up. As long as we remain in positive territory, we can see more positivity. But if we start to curl down, kind of curl back up and curl down again, kind of solidify a negative trend on the daily scale, we very well might be seeing that trend take over. We may be in that bear market. The monthly ranges here, 463.11 to the upside for the Qs and 424.91 to the downside for the Qs here. So interesting to see if this actually does want to spread out. We actually noticed the Bollinger Band starting to get just a little bit tighter in this move, right? A little bit. We go from expansion, right? We expand these Bollinger Bands, we get tight, then we see that expansive move. So you can see that happening right now. If we start to curl back up on this, it's a little bit tight in here, so we may want to see a big move in the future, lining up with all these divergences on the Qs. We're seeing all the divergences across the way here on the Qs, pointing down as the price action goes higher, and the Qs not confirming that move higher at this point. These monthly ranges will come in handy because if you notice, the SPY last month ended right at the top of it. It actually ended right at the top of that monthly expected move. So they are powerful. And if you want these for the individual stocks, you can go down in the description, join my Patreon. We'll be adding a couple more to those, Microsoft and Google, to that list that I give you for those weekly expected moves once we hit a few more members. So just something to look at. It's very, very useful for your trades as a take profit, or even finding some kind of trade setup, because you do have that 68% chance to land in this zone. But you notice that the Qs, these divergences up here a lot closer to negative territory. That's very important. The Qs actually have the potential to go into that negative trend a little bit easier here. And the reason that I want you to really pay attention to the Qs is because of this weekly chart here. You're noticing this flatness of the MACD up here, flatness of the MACD, flatness of the RSI, even a little bit down on the RSI here, which means that we can start to curl down. Now, does that mean that it all has to be ripped away right away? No, it just means that we have the potential to go into a negative trend, especially when it's flat. We'd like to see it a little bit closer to that center line on the weekly. But if this did curl over, you would expect some kind of corrective move in the future and then head up to this. So maybe we were right at the beginning of the year saying this might extend all the way into October. But if some kind of black swan or something bad starts to happen, if we start to break through this level, it can get really ugly. And the reason that I'm leaning towards something like that is because of how the monthly looks. It looks like we could, on the Qs, we could be seeing this go into a negative trend, okay, on the monthly scale. So you're noticing down here on the MACD and RSI at the same time, we do have a pretty good divergence, and we do have a good divergence here on the RSI as well, which means we can roll over and get closer to negative territory. So if any selling continues for a couple of months, as we do get kind of an indecision bar, even at higher levels, but still a little indecisive at this point for March, we actually could see that roll over, confirm this move, go into negative territory, break through this level, and we might be starting some kind of big negative trend on the monthly scale, which means that we could head down and test this level down here. We could even break through this trend right here and head to lower levels, maybe even down towards those COVID lows around 166. Okay, so this area in here might become important, and that's because it lines up with the monthly 200, lines up with a trend, and guess what? That was a good level where buyers did step back in, especially when, Jerome Powell was just pumping loads of money into the system. So will they have to do that again? We'll have to see, but as of right now, I'm just telling you that this monthly chart does not look good. The weekly chart does not look good from a momentum perspective. Doesn't mean we can't get some kind of correction and then start to head up again. Maybe we want to extend all the way into October. Maybe we want to wait until the Republicans in office before we actually want this to crash down. Now, Apple's one of those stocks you can get that weekly expected move. Seeing this daily actually curl up, right? We see this curl up, but is this just some kind of ABC move to head lower? Apple is showing a lot of weakness. Remember, this is one that we talked about on the weekly, saying this can see a lot of weakness up here. We could get a double top on the weekly scale. What does this look like? Well, it looks like, some divergence up here closer to negative territory. So you notice as we're closer to negative territory, we're rolling down into it. Doesn't mean we can't see this extend, right? All this has to do is curl up a little bit. It's not that deep. We could see a positive move here. You have to be open to both as we're at the bottom of the Bollinger, but it does not look good from the daily perspective and the monthly perspective as well. So the daily here, you just want to see if this is able to roll over in negative territory. Well, then that would say, hey, we're in a negative trend. We're going to see lower prices for Apple. Where could that head to? Well, first you want to see if you get a test of this 165.80. 165.80 is going to be a very important point for Apple to hold up, and we'll have to look back on Sunday when we give you guys the weekly expected moves and the daily expected move for Monday for the SPY and the Qs. We'll have to see where those land, because it might be somewhere around 165, and that might be telling as to what's going to happen going on into the future. Tesla on the daily, this was one that we were really paying attention to because it had divergence down here. So we said that this had some strength in it to bounce from this level. Guess what? Curls up on the MACD. We see some of that strength come in. We go from about 160 all the way up to 183. So this was a good trade setup at this point. Hopefully some people were able to take advantage of that. We even had 2-hour divergences in here that we covered and we posted on Patreon. So congratulations if you were able to catch a little bit of this move. And then, we had multiple plays throughout this move, right? So we had a lot of things going on with Tesla. The thing I want to look at is the weekly real quick. Just see what that looks like. Well, it looks like we're dipping to lower levels. We're in negative territory already. So Tesla and Apple actually telling you already, hey, we're in a negative trend on the weekly scale. Even if we curl up for a little bit of time, do we just get rejected maybe at this trend line up in here? Maybe we get this to curl up and then curl back down over the next few weeks. Now, I do think that April has the chance to rip some of this even further to the downside just because of how a lot of those AI stocks look. Okay, so we are going to look at those stocks today. But as as you can see on the daily scale, looking at that divergence, this really does look like an overall flag at this point, right? Doesn't it look a little bit flaggy to you? Look at this. Well, that looks pretty flaggy to me, and this could just roll over. So we're going to go into the shorter timeframes on Sunday. Make sure you're liking and subscribing on this video so that you get to see that info on Sunday and get those weekly ranges for the SPY and the Qs. Very, very helpful tool. Amazon is one that looks like it could see some of that positivity if this daily MACD can just roll up and go positive. But will that kind of get rejected as we get overbought? We'll have to see, right? See if we see some positivity, because we could get that divergence up here. We could get another divergence up here. We have one little one right here, one on the RSI at the same time. Right now, consolidated in this. We did very, very well with Amazon going with this, seeing that head and shoulders, trying to break to the upside. But it hasn't seen that strength as it breaks through this level, right? It hasn't seen extreme strength. It's popped up, it's retested. Now we're looking for that big push up and that curling up of the MACD. So you could see a few days of Amazon going a little bit higher, but the momentum is going to probably start to really die out at this level if you see some upside. If you see some downside, well, maybe I want to pay attention to a weekly chart. If I look at my weekly chart, this thing is up in no man's land, and we're seeing some divergences in the recent weeks, right? We're seeing that on the RSI. Now, it's not on the MACD at the same time, so that's why this could just be some kind of pullback in order to head higher in the future. So we want to be open to both scenarios. This is still a very bullish market. We haven't gotten a lot of bad news. I know that we understand everything is really broken, right? The economy is suffering. Inflation is bad. The banking crisis is potentially about to happen. So there is plenty in this market to be worried about, but the market continues to go up. We trade the price action. So if this just curls down for a few weeks, curls back up in positive territory, we're going to see another positive move. NVIDIA is one that you are going to want to put NVIDIA should convince you to possibly, go get that Patreon down in the description. It really should, because that range is really, really helpful with the monthly and the weekly expected moves for NVIDIA. We can look at areas to take profit. We want to be very quick when we're trading this. We trade like water on this channel. We move back and forth and we follow the price action. But you're just noticing the weekly up in no man's land, extremely overbought, like pretty much just blowing off to the upside. Now we're finally seeing a red bar. Look at all these weeks of green, and we finally see a red bar on a weekly. Now that is still at that 5-week moving average, so we could see that move upward here. Want to go look at a daily, because this is what we were talking about on the daily scale. We're going to look at these shorter time frames on Sunday, so make sure you're subscribed there. But the important places to pay attention to, look where we're at. Well, if this is going to be some kind of major sell-off, we really got to lose the 20. You got to lose the 20, and you got to break through this area of about 840. I think those are your two main levels you need to break through, but you're just noticing it's still up in no man's land. We're getting almost a double top here. You can see that on the RSI right here. So if we wanted to see some kind of pullback maybe to the 50, that would make some sense, and then we could see that curl up into positive territory and say there might be another move in Nvidia. But will Nvidia just skyrocket to $1,000 this week or sometime in the month of April, and then we see that just ripped away with some selling? So we'll have to pay attention to if it gets to 1,000. Remember, we looked at SMCI, and that was one trade we were like, once it hits 1,000, it's going to go a little bit higher and we'll see some kind of sell-off. The first time it went over 1,000, we did see that wick out. Now we're seeing higher price action. We're seeing this happen up here. This was where our weekly expected move was 1 week, right? It was right up in this area, went a little bit higher, take your profit. Now you have that chance, that 68% chance to land beneath. So that's how they can be useful. You just want to see the crash indication would most likely be, or the potential crash would be, if you break through 840 pretty decisively. And then if you're able to hold up at this 50, you might have one push left in it. If you can't, then we might be breaking down to extremely lower levels on Nvidia. As this thing went up very, very quickly, we could head all the way back down into our next liquidity zone, our big liquidity zone. So areas that I'm paying attention to, 570 and 459.54. This area right in here could be very important. This is the last place where buyers really piled in. We got some good liquidity, and then we saw the explosive move. So I assume this will be very, very important. If we see some downward price action. Now, AMD, this thing, we're talking about it on the shorter time frames. It's just consolidating in here. The fact that we've been in this area for so long, we can see an explosive move. Look at this. When we compile up in an area for a long time, this is even longer, we see that explosive move. So now you're doing that right now. Is it going to turn up this daily? Are we going to see more positivity from AMD in April, well, you want that to curl up into positive territory. Then you got a shot to make a divergence up here. You can come test these levels up here. So we haven't seen that yet, so you can't get overly positive. This is in negative territory at this point, which means the selling can pile on. So I wanted to look at a weekly here just to show you guys how this one looks like it wants to curl over. Okay, this looks like it wants to curl over. Doesn't mean it has to, but we do get that data. Remember, we get CPI on April 10th, and that's going to be a big, big day. But this is holding up at a level where you'd expect it to. Here's that liquidity, but what if it is some kind of head and shoulders that sets up very soon, and then we start to head down? So be open to multiple directions on all of your charts right now. You just want to be out there trading like water, flipping back and forth, taking your profit a little bit earlier in an environment like this one. Meta was just added to the Patreon. We gave you that monthly expected move for Meta, and this actually was helpful, right? We took a little bit, we found some trades in here that allowed us to take some upside. Where do we start to hit that sell button? Right towards that monthly expected move. So this was a great trade for myself. It was a great trade for our community over on Patreon. We do post some trade setups when we do see them, and so we pay attention to a lot of things, and we overall drew this trend out. We said if we make any kind of move outside of this trend, we could hit that monthly expected move. We didn't get all the way up to it. We were a few points short, but as of right now, you see that wick out at that point. This was a great time to use those weekly expected moves for some kind of profit taking. Now on the daily scale here, I just wanted to show you how overall, we're not seeing this curl back up and go positive. We're getting closer and closer to negative. So what this means to me is now if we do go higher, I have the potential to make some kind of divergence in this area that will get me very, very close to negative territory, telling me, hey, the momentum is really dead here. If we get some bad news, we could see this really ripped away. So at this point, we want to be open to that right now, seeing a little bit of a sell bar, right? We're able to close below the 20. So you might say, hey, we might go test the 50. I think you might come and test this level, this 453 level, pretty soon, because this is the last line in the sand. It really is before you get to this gap. When you have a gap like this, you can really start to sell through it like butter. Like you can cut through it like butter. And it's a very worrisome sign if we start to see this break down below this level. All right, and I did save this signal on Apple because of the month actually closing. So I wanted to save this for last. If you watched to this point in the video, thank you so much. You're going to get something that is very, very good to pay attention to. I wanted to show you guys how the monthly divergence up here for Apple has confirmed for 2 months now. 2 months now, we have confirmed this. We got the confirmation bar. We broke through some of this wedging here, and now we're starting to see it crash down pretty hard. Now we are at that 20-week moving average, so we want to pay attention to that. We could head lower here. That is what the momentum is telling you. It tells you that this is a momentum shift, and we could actually see lower prices by the end of April. Now, will that take us down into negative territory right away? Most likely this will take a couple of months. So we're going to trade the price action, right? But if we see something really bad happen, Apple can go into a negative trend. We could start to test levels like 123. If we start to break through this trend, it's not looking good. It looks like we could go all the way down, possibly to the COVID lows around $53. So isn't that crazy? Like everyone's thinking about buying stocks right now at these all-time highs. And I'm telling you, hey, you have the potential to maybe buy Apple at $53, right by this, 200. So we want to pay attention to lower prices. Apple telling you that the market is actually much weaker than what we are seeing in the price action right now with Nvidia, AMD, and all these other crazy stocks that are just popping off to the upside. Apple, a big hitter in the stock market, is telling you, hey, I just confirmed this monthly divergence, and we're seeing those monthly divergences on the SPY and the Qs, and they haven't confirmed yet. So is Apple telling us something about those charts? Is Apple saying there is weakness here, and we are going to see this drop down? Maybe we get some kind of retest, and that is ripped away in the month of April. That's why I'm going to be paying attention to my monthly expected moves very, very closely for Apple. And we saw some 2-hour divergences that we'll talk about on Sunday with volatility. But I just wanted to mention how it's still pretty close to that positive territory. So I do believe that we are going to see at least a correction, if not some kind of crash in the form of a bear market once this curls up into positive territory. You notice every single time, I'm just saying, once it curls up, we could see that moment. Once it curls up here, we can see that moment because you're so close to positive territory and you have stocks that are so overextended. You have the SPY that's so overextended while the Qs aren't confirming that move right now. And you're in some wedging in here. You're in an overall bigger wedge. So maybe we get some kind of reaction up, get some kind of little bounce in the market that brings the volatility down, and then we see that start to break to the upside and get up towards 20. And that's the best part about the course. Once you're up towards this 20 area, I'd say overall above 16, but 20 is where it's very, very safe. That course will take you through, tell you about these indicators so you get more in depth with them. People are really, really enjoying it and talking about it live with me throughout the week. We go live every single Monday through Friday to walk through and watch some of these daily charts, some of these weekly expected moves, and seeing if we're seeing any reactions around those. So right now you're seeing the volatility could pop back up, and that's why we just want to pay attention to those monthlies throughout the month of April. One of the last things I wanted to show you was the dollar. Okay, the dollar, it's still seeing, right, we saw this big upward move. We're seeing the dollar pull back down, but notice this, we're actually still in positive territory on the monthly scale. So if this starts to really gain some steam here, we can see the dollar go up. And the thing about the dollar over the last, few months is we've been seeing the dollar actually trickle up. We've been seeing the dollar trickle up with the market, which tells us that the insiders are selling. Okay, insiders are selling while retailers are holding this up at higher levels. Hedge funds holding this up at most likely higher levels, and therefore we have to say they probably know something that we don't. I believe something in the market is sick, and I believe we are going to go through some kind of banking crisis that makes this dollar start to push higher, which will not be good news for the overall stock market. Now, if we are going to see positivity for weeks to come, right, if we just see some kind of corrective move, maybe this bounces up a little bit and then we start to pull back down in the dollar, see that drop dramatically, well, I'm going to see this curl back down into negative territory. Once it goes negative, I know, hey, there is positivity left in the overall stock market. But as the dollar is moving up to higher points right now, we can actually notice that the SPY is holding up at higher levels, which tells us that one of these are wrong. And I'm going to tell you right now, as we looked live at all those insiders selling, I'm going to guess that the dollar is right, and we are about to see a big reaction down for the SPY and the Qs. Main takeaway here is, yes, we do trade the actual price action while these things are happening, but you want to be aware of all of these types of things. You want to be aware of these monthly charts. You really want to be aware of Apple confirming that divergence on a monthly scale, telling you, hey, I could go into a monthly negative trend. This means that Apple most likely will be heading to lower prices on the monthly scale, may get some bounces on the way that we can trade, but we want to be open to lower prices, and that's why it's important to have a bear market strategy. That course only up for $100 for the next 24 hours, so make sure to grab that. But it is not looking pretty in the market. We are extended to very, very high levels. We are very overbought for quite some time now, and we at least need some kind of correction, or we may be getting some kind of crash in the month of April. Thank you guys so much for watching. You're always liking, subscribing, showing up to the live video. You guys may know that it is just a ton of fun for me to hang out with you guys throughout my day and or throughout my morning with my morning coffee and watch some stocks with you guys. So I really appreciate it. Make sure to leave this video a like if you enjoyed the content, and go grab that course if you're thinking about learning a little bit more about these indicators and maybe you need a bear market strategy. Once April comes, we may be seeing a bear market, and that is something that you can make a lot of money in if you know how to trade it back and forth. So I really appreciate you watching this video. I hope you have a great rest of your weekend, and I will see you on Sunday. Have a good day.